Hey, good evening. Good evening. Um, really wonder how well we're doing this evening. I hope we're all doing well. I'm gonna let this kind of build up, see if people are joining. Give some people some time to join. They just got the link. I just posted as well on IG. So I'm gonna go get a bottle of water. We're gonna talk about some stuff, yeah? Or a cup of water rather. Just put this. See what's going on. Yo, what's up? What's up, my bro? Try to put down. Can't remember where I put that paper at, but whatever. We're gonna talk about market stuff. I want any and everybody who's able to join, drop some questions so I could feed, so I can potentially feed off the questions and start to build out certain things. Right. I want to talk about risks right now in the market. I'm going to talk also a bit about I want to talk about risk, but I also want to talk about like what's booming right now in the market too. Like I don't I don't think it would give it justice if we just talked about risk, because I mean that's I guess talking about risk is the unsexy thing to talk about because everything is just up and to the right now. But I do still find it very imperative as as a capital manager to always be keeping an eye on risk, always keeping an eye on risk. Like what? Because that's the ones that blindside you. You know, you you think you're all good. You think everything is in motion or whatever the case may be, and then you get hit over the head with something that was unexpected. But was it really? Or maybe you just potentially ignored that off rip because of the other things that were just so amazing and so beautiful and so perfect that it effectively blindsided your ability to view risk, you know? It's so crazy too, because I'm looking at some of the previous like market talks that we have on here. And what, 6 months ago was probably one of my first live streams, November 16th. And I'm talking about my long on on energy on XLE. Like if I show you what tab is this? This tab. Better ways to it's like a mirror utilize my live stream when XLE was at 92 bucks and how it was where I'm sharing like interest of, banging up against the wall, but we needed some type of catalyst, right? We needed something to like really push it and a deeper dive right up as well, XLE out from this like range that you see here. That's pretty much it for me. We got a catalyst. That's for I'm sure, in a journal, right? Like do some more thinking, do some more planning as well for the 2026 positionings. So like, I want to come to you all next week with some more ideas as well. I'm pretty sure so energy has come in a bit. The markets, like, really. Meaning that the war isn't really the main week going to be really receptive to what happens, the main thing at hand, or we get to see a little calm down. I still think that's a risk that needs to be continually like. You okay? Like, make sure you take time to meditate, like, ruminate on your ideas very often. Sit on them. But like Stan Druckenmiller says, the lineup that we got. Invest first, investigate later in a way. So this is the aftermath of that lineup. Maybe don't, if you have a position in mind, you're gonna put $1,000 on it. We maybe didn't get the put $1,000 on it immediately, right? But the retrace that I was more so 200 thinking of or hoping to receive. But here we go. XLE from that November time period. Oh, where did that go? What was that? November 16th, I said something like that. So let's just take it from the 17th up into the highs of what are 48%, 43% of re-rate, and now sitting at 28. I mean, it's just beautiful. sometimes to just look back, right, in hindsight and say, wow, like, okay, you played that really well. You waited for your catalyst. You got on. You took your strike, um, and you kind of was able to grab it. I mean, like now I'm more so out mostly of my energy related positioning. I do still have some shares of some companies that I really enjoy for the longer term, but looking at it from a sectorial like point of view, like energy, um, I think it's kind of run its course in a way, and it needs to digest this like expansion move if we were to continue to push up. I just think in the shorter term, I'm not very bullish on energy, right? Seeing that we're probably in this digestion period, as well as a slight wind down in the war, right? Kind of, sort of, for whatever that really fully means. Um, and and because of that, um, you know, we're probably not so much in the expansion side of those things. So I'm more so transitioning over to the other side where I'm looking for other sectors and other names that have been beat down and kind of not really not really um, mm, one second. So I really want to talk about, so like, because right now we're seeing the semiconductors. I'm gonna get some water, my fault. But I see some people are here, so we could probably get going soon. Yeah. All right. Cool. So we've seen what has happened so far in the semi space, um, and that semi space has been like honestly monstrous, right? Like it's been fully monstrous for in quite some time too. I don't necessarily believe that you will start to see some more broadening out, right? Seeming that um, some of the names that have gotten love in the past. I mean, they still are mostly, but I do think we're gonna get a little bit of some kind of like breather in the sense of like we could take a little break, right? Like we've done great in this expansion period, um, and I don't think it's going to end the run in semis because that run is still like propagated up with bottlenecks. But I do believe, and that really won't be solved. At least the run itself really won't be solved until the bottlenecks find their way to get solved as well. Um, okay, we got a few people in. Let's see. Cool. So let me know what you guys would like to. What would you guys like to hear? What do you guys want to talk about? You guys want to mark up charts for this week, or like where are we at with like certain comments and sentiment as well? Because I think if I were to pull up some of my research here in Discord, I could try and find. Maybe let's start with the macro view, right? So like, what's looming risks? Oh my gosh, come on, just load the deck on Discord. Wait, why is my thumbnail picture upside down? Okay, whatever. I'll just leave it alone. Anyways, um, we've got a ton of positioning. Oh, actually, you know what I really want to talk about? I want to talk about bubble. I want to talk about bubble, right? That term has somehow come back into the argument of what's going on in equities and price and how things are bubbly, right? Like in a way, like okay, in a way, for a bubble to form, it is basically in my opinion at least, unprecedented. One, price movements. Two, that unprecedented price movement is backed by unreasonable fundamentals. The price is not moving as well as the fundamental aspect of it, right? So it creates the gap between, because like in every valuation, as we know, in price as a whole, right? We know that there's basically like two major things. And I also mentioned this recently in my market talks. There's perception, or the fundamental aspect of that moves price, right? Where a company is, oh, we are gonna increase revenues by 10%, and because of that, we've also decreased our spend by 8%, and that's going to create a much larger gap in profitability of us as a business because we've made these adjustments. We've moved this here. We've solved this issue. We no longer are spending on that. These types of things, right? And then that drives price because effectively the company is now more valuable than it was prior because they've been able to go about and increase the ability for them to return cash to their shareholders because they have more profits now. Then there's the narrative side of things. This is kind of where the market has been, at least really since 2023 as of late. But the market tends to go through this pendulum scenario where it's like narrative based, fundamental based, narrative based, fundamental based, right? And a lot of times when the market is in that pendulum move of fundamental based, narrative based, right? We have to be aware of what to allocate that strength to. Is it because the narrative of the company, because Trump mentioned it? Is it because it's a meme name now and retail has found a way into the price movement, into the action? Is it did the CEO come out on some podcast or interview and say that they potentially are going to have a deal with some company coming up and it's going to, and that changed the perception of how you're valuing the company in the structure? Oh, wait, if they're saying that their largest customer that they haven't even onboarded yet is this person or this company, and that company is said to expand CapEx by 600% in the next 2 years, and this is a major piece of that company's supply chain, then that means the CapEx spend of this company is going to trickle down into this company's revenue. And then that company's revenue is going to be massively outsized because now whatever that hyperscaler was spending on CapEx just gets guzzled down into these smaller companies because they're trying to build out this thing, right? So if you ask me, in a more, a day-to-day example, if a small mom and pop restaurant somehow gets they're used to, 50 covers a day throughout the day, right? 50 tickets basically, and maybe 1 to 2 caterings a month. And then all of a sudden, some TikToker steps in and they're like, oh, you got to come get these sandwiches from this spot because da-da-da-da, right? And then now all of a sudden, they had 50 covers and 2 or 3 caterings, and they're making okay money, barely scraping by. Now the narrative comes in, TikTok takes them viral, whatever, Instagram reel, whatever the case may be. And now everybody and their mama want to come try the sandwich spot, right? Does that mean that the sandwich spot is now going to potentially make more revenues? Yeah, probably. Like, top line, done and dusted. Probably. Because they literally brought more people through the door. Are all those people going to convert? Probably not. Maybe some people just walking in to see the vibes, right? But that somehow 50 cover restaurant turns into a 120 cover restaurant and maybe 15 caterings. You just 2x their top line. You increase that company's revenue. Now, will they have to buy more product? Of course. Will they have to maybe staff the restaurant for more individual, right? You got to cover more tables. It's not just 5 or 6 tables per hour. Now it's like 8, 9, maybe 11, 12-ish, or 15 during the busy like peaks of eating time, lunch and dinner, right? Cool. Right? But the idea is maybe they were making a 10% profit margin on 50 covers, right? So let's just say that's $50,000 a year in whatever revenue. They made their 10%. Cool. They got their 5K in profit. Obviously a smaller margin, like, right? But then now, all of a sudden, they've turned it into 120K, right? 150K with the caterings. And yes, their labor expanded, their cost of goods sold also expanded, but did it expand that much? Like, how much more did you have to really buy double the amount of food to feed double the amount of people? Or maybe did you get some economies of scale by being able to buy larger in bulk, right? Or maybe you only staff some of the stronger individuals so that they can cover 4 tables at a time instead of the weaker individuals that maybe can only cover 2 tables at a time. And you staff them properly, right? These are operational changes that will come with it. So now they're making 10%. Now they're maybe making 12%. Maybe they eked out a little bit more, 14, 15% on a higher top line of 120K, 150K. Now a 5K profit month turns into a 15K profit month, right? You've drawn forward effectively 3 months of what was the profit prior into this current month. Is that right? So that's effectively what's happening right now in this space. These companies are drawing forward tons of earnings and revenues and EPS growth in this shorter stint of time because of the sheer move of the company's ability to go ahead and spend on this case. And whether that's narrative driven, in this case, it would not be narrative driven because that's more fundamental driven. These are hyperscalers ready to drop a check on y'all to get this move going, right? These guys are trying to drop a check on these dudes, on these smaller names to get going. And one of the cases that we may be in that we're seeing is what we're seeing in the data space, the packaged software companies. Names like MongoDB, names like Snowflake, right? You see these massive re-ratings because you're starting to see that these data companies, these data servicing companies are now being contracted out to manage data for these AI models to be able to filter and manage the data even better. Look at Datadog. Datadog's at all-time highs now because of this type of, right? They got contracted by Anthropic to do data management and help them out there, right? Like, the name re-rated, bro. We're talking $100 stock to $250 in a matter of 6 weeks, 8 weeks, something like that. Like, what is that? 40 days? 6 weeks? Right? Because the companies are increasing in revenue dramatically. Now, this is where I said I wanted to talk about risk. Now, if at any point these hyperscalers and these spenders pull back on their spending, right? That's where we're going to see this kind of potential, peak-ish, right? I'm not calling it top. I'm not saying any of that, but I'm trying to sit here and ruminate and think on what would create a pullback in price. Like what would create, what are the, right now everything's limit up to the right, but what are the current potential looming risks in the market? CapEx spend decreases, right? Spend decreases on like LLM use as a whole, right? Like or less people signing up for Claude Code and enterprise versions and tickets, right? Like what happens then, right? You want to read the rhetoric in that case, because just recently we're seeing how certain companies have started up the use of these products, but they're not really too knowledgeable about it, and they're not understanding. I think there was a story where a company didn't put in their limits properly on their internal team, and the team ran up a check, $500 million in tokens used for the company, and they got to pay that company got to pay that fee out to Anthropic, right? And Uber, I think CTO comes out and also recently said, like earlier this year, probably somewhere around April, that hey, they already blew through the AI budget for the year, right? So I think what really comes to this is like, are these companies going to get better or more efficient with their use of their tokens, or are they just going to say, I don't care, we will buy more, right? Like those are the gauges that I'm trying to see in sentiment, in the tonation of these CEO interviews, of of what's being written in between the lines in these earnings reports, and like where they're looking to go, because companies, as you know, are willing to take other measures, like finding ways to cut spend in other departments to be able to account for the spend that they're going to spend in AI. And some companies are willing to do such, right? That's the looming, that's a part of the looming risk, right? I think that's probably one of the main looming risks. But there's so many things that are set into motion that have been pushed that that have been pushing that risk off. Like no, not now. We're not going to stop spending now, right? We're going to focus on this, right? There's executive orders. There's these deals from the Pentagon. There's so many other ways that are coming in now, right? Like when you look at companies like IBM and Dell and what they've just been able to do as well, right? These guys getting quantum deals. I think GFS got a quantum deal. There's also recent executive orders coming in from the government saying that they're declaring an energy emergency, right? So like when you think of flows or capital flows, or like where's the money coming from, right? The money came from hyperscalers, free cash flow, and it still is rather largely. But as of recent, you may see something that you may see, a bit of debt as well, right? Like some of these companies are going overseas to try and raise debt to be able to push more capital into their build outs. And a part of me struggles to find it to be a bubble when there is earnings behind it. It's not built, it's not froth. It's not just these evaluations are flying because people are believing a narrative. People are believing, they're drinking the Kool-Aid, if you will, right? It's also because their earnings are expanding dramatically. Now, something did come into my purview as of late that was something that I thought about, that was like, maybe I'm dismissing the bubble talk because of how it's traditionally defined, right? Like that, basically a bubble is the unexplained rapid change in price. But I feel like it's explained. As of right now, as the agent, I feel as though that price change has been explained, right? With the example that I just gave you all. A restaurant selling 50 covers are now selling 130 covers. Their earnings are growing. These companies' earnings are growing because their revenues are growing. They've achieved economies of scale. There's so many levers of unlocking capital to feed those companies for their earnings to grow. So now I need to find what would cause the inverse, or what would cause the slowing down effect of that, right? Like, again, if these companies do that, right? If the companies pull back on CapEx, if the companies are not spending as much, if the government policy has lightly changed, monetary policy, fiscal policy has changed to maybe adjust this or not be conducive of that, right? What macroeconomic things may come down the pike to change that perspective on that, right? So those are some of those pieces that I'm looking for. The one things I am, watching for are obviously earnings, right, of these companies. How well, like, what's going on there? Also, the macro approach, right? Like, what form of like, how are we doing in jobs data, right? Like, how does that reflect in other things, right? What conferences are coming out? And seeing how well the space like takes to those data points. That's why I'm always reading new information, always trying to incorporate that in my mental model to try and add those extra elements of, okay, like, that's interesting. But I'm poking holes in my own theory, and that led me to, what if it's an earnings bubble? What if it's not a bubble in the traditional sense, right? That we all know and love, of like, oh, it's just hype. There's no fundamentals behind this. There's no revenue increase. There's no earnings increase. There's none of this is going back to the shareholders. So why is the price re-rating? It's all just narrative. But what if it's an earnings bubble where earnings have grown so much that the new floor of earnings is 15%, 30% lower from where it currently sits, right? So to go back to that restaurant example, yes, it went from 50 covers a night to 130 covers a night to, somehow doing another crazy bit out of catering, right? They've kind of reached their limit, if you will, in what they can do, right? So now they go ahead and open up a second location, maybe a ghost kitchen, to be able to just do catering out of that, and then do the actual in-store dining in their current location. So now they're spending a piece of their margin now to figure out how to withstand all this new volume that came in from the TikTok craze, right? Or that came in from whatever craze that came in, right? Then what happens then? They've increased their expenses. Those expenses are fixed. Essentially, they have a rent now. They have to probably hire new people to man that location. But they have to buy, property, plant, and equipment to be able to run that catering business, right? Like, and then now their expenses expanded to potentially meet up with that new recurring demand. But then the top line people, the TikTokers of the world, go find the next thing. It's no longer about AI and LLMs and compute and chips no more. Maybe it's about robotics, right? Which, I mean, I guess is adjacent to the AI and the chips, because they need both of those to run the robotics. So maybe not that example. That's not a great example, but what if, I'm trying to think, like, what else could, like, what if it's not about AI anymore? Or what was driving it initially is no longer, it's not about that anymore. What if we just don't care about the AI stuff anymore, right? Which sounds blasphemous, right? I guess the greatest thing since sliced bread right now. But I'm trying to think risk here. I'm trying to think what would throw the craziest wrench in our spokes on the bike right now. Like, what if this AI stuff just doesn't I'm not trying to be a doomer here. I'm fully, I'm long AI, best and believe. You know what I mean? Like, I'm a part of it, but within my everyday think, I'm trying to think like, how far does this really go? Like, what could be the wrench? And I'm starting to think that a piece of that wrench could be, they've reached the capacity that's needed. We have several wrenches going on, right? They're blocking the AI data center build outs. That's another piece too. Right? Less builds means probably less energy needed. Also means probably cost per token is still as high, if not higher. Which then means that AI is expensive for the end user, and if we don't see a deflationary effect in the cost per tokens for each end user, then it may lead to certain individuals who are just interested in just exploring the space and just poking around and seeing like, oh, what's over here? Like, how can I use this for? Okay, we don't really need that anymore. We could like terminate that contract, right? And that reduce spend, right? Does this restaurant expand too quickly to try and meet this demand and capture this demand? So much so that TikTok and the rest of the pop culture world has moved on from that restaurant that made sandwiches already by month eight. And then now you're stuck with a heavier expend, right? Then you as a business owner, the restaurant have to make hard decisions of, well, do I need the second lease? Maybe I expanded too quickly on unsustainable demand, right? And then that starts to see a retracement in these re-ratings of price, right? These are the things that I'm looking out for. I'm looking out for cracks in the system. Are there cracks in the money being spent? Like, what's happening here? But that's enough of that doomerism talk, or I guess anti-trend talk. But let's also look at, what we've had. Right now, as you guys probably know, I'm long IGV. I've been long IGV for quite some time. Software has been beaten up, and I feel for all the wrong reasons. All the wrong reasons. Because I've learned this. I think I've like encapsulated all this, right? One being this. Me, as a younger, maybe more inclined to innovation type of person, I see how AI products could disrupt software. I see how it could happen, right? But it requires a certain level of technical skill set that I don't believe the masses have. Now, when I say that, I don't mean that the everyday person can't hop on AI and extract value from it, right? That's not the case. I mean that there comes a point in AI where you begin using it beyond just its chatbot interface into more agentic interface and more CLI, direct to build interface, right? And I believe that there's a massive gap in terms of the total addressable market and where their technical skill set individually lies to be able to use AI as an architectural piece to build value for themselves or for them companies, right? So, for example, the everyday person, in my opinion, without much technical knowledge, right? Like think like the HR personnel, the early stage product manager person, right? I feel like they're using AI in the co-work side of things at the max to summarize things, to draft emails, to do the busy work, right? To do all those like lighter lift items. And mind you, it grants them like value, it grants them purpose, right? There's angles to that, but it doesn't kind of like really leave them like yearning for like more, right? And also those individuals have to have a creative mind to be able to try and push beyond what they're currently using it for. I think a lot of times these companies or these individuals will use it for that thing, realize it's good for that thing, and then only use it for that thing every time. Like a locomotive, like, yep, we're gonna do that. Cool, I'm gonna throw it in chat. I'm gonna throw it in call. I'm gonna throw it in chat. And they're only gonna use it for that thing, right? So for them, it's not incrementally becoming important to them in their workflow. It's just becoming, oh, that's a tool that I use for that specific thing. And that stems from the gap in education that has to happen. From a non-technical person to try and step into what could be, the growth of something from being a email draft scenario or summarize my last Zoom meeting for me and get all the notes there into I'm making custom dashboards with like direct input from our CRM and able to pinpoint inefficiencies in business and manage that and be able to ship software to the rest of the team internally so that we can all manage these similar things, or the people that maybe these executives oversee, to be able to keep on track of all these things, right? That's like next level use of AI. And then when something goes wrong in those code or in that software that they shipped, they run back to AI to try and fix it. And it leads to maybe some hallucination in AI, right? They're like, oh, we're trying to do this. You type out the problem and it comes up with a completely different problem. And it's like, oh, don't fix that problem. That was never a problem. Hold on, wait, come back over here. You're supposed to fix that. And then now you kind of broke what was working, and then what wasn't working still doesn't work, right? And then those individuals, again, who are not the very highly technically inclined individuals, are sitting back like, oh crap, how do I fix this? I don't know where in the code this did that. I don't know what did this, right? And then that's where traditional software is going to begin to win. What the heck? How can I just drag this down? That's why I believe traditional software will begin to win more. Because guess what? When you have ServiceNow, or when you have CRM, Salesforce, or all these other software companies to build these dashboards, to run your data, to run your business on, to understand that 17% is happening here, or whatever the case may be is happening here. When you have those things, you can contact their specific concierge. You can create a ticket, and then you could go about doing the rest of your business. Because when we're in AI and we're using AI as if we're software developers our damn self, we now have to be the employee of HR. We have to, or this individual, this product manager. And we also have to be the technical engineer. We have to be the engineer of these platforms that we tried to build and man our own, that we didn't want to spend $50K and $3K a seat on for a CRM service, or for an Oracle service, or some cybersecurity service, right? As Palo Alto, right? And because those older individuals are sitting in the executive seat currently, and yes, they do have some underlings or some maybe just VPs and some analysts that are pretty, inclined and knowledgeable on these things. I don't think the everyday $100 million business is looking to build out custom software, because it expands the current role. It turns their HR, product manager, whoever the person is, accountant, into also being an engineer. And are they technically able to, yes, conceptualize it, architect it, ship it, and then maintain it? That's the question. And then, right, can they justify the time spent to do all those things with Claude? Even, I get it, it's doing all the heavy work. You can prompt it, leave it alone, go do your thing, whatever, fine. But when it breaks, when something goes wrong, or something happens in your traditional role, and you have to really double down on what that problem is potentially in the business, as opposed to, oh, I'm just like lollygagging over here, building out some cool dashboard for the team, like vibe coding it, right? Now my time gets pulled away from being an engineer to back to my main core of my role. I want to delegate that work. I want to offload that work to the software companies that have massive recurring business cash flow moats and have been beaten up and aren't, you see what I'm saying? They don't want that responsibility to be the technical, oh, I got to go fix what happened in the code now, and I got to go talk to Claude and figure out what I do wrong. Those individuals don't want that responsibility. They want to be able to write up an email and say, hey, XYZ ABC happened, and I need for you to fix it for me. Or can we schedule a call so that we can go over this, so that we can fit? Like, that's corporate culture. And until the regular $100 million business can break out of that way of thinking, I don't quite think AI distills down into the way that the markets have priced in these SaaS softwares to drop into. Right? Like, you got these companies trading at disgusting valuations to prior years and beyond. And I don't think that the human psyche is ready to accept what AI could potentially do in this world. And that's why I'm hyper long software as a value buy. These companies have great fundamentals. They're trading, some of these cases, they're trading basically par to cash on these businesses. And then on top of that, right, now it's like, oh, these companies are realizing that, the people that they have to hire now to be able to do their job and manage this are skilled beyond what currently is the scenario. So if you ask me, if you're technically inclined and you're good at your role currently in corporate America, you are like the creme de la creme. Like, you are everything and everybody, like what they want. Because you can extract tons of value from your traditional way of thinking and traditional way of providing value to the business, the product manager, as an accountant, as a bookkeeper, as a purchasing manager, whatever the case may be in their role. But then you can throw nitrous on it by using Claude to automate certain roles and potentially, do the locomotive action if you have recurring tasks, but then also be exploratory and try to find ways to add value to it. That's where the true winners are. But I do think this software SaaS apocalypse or whatever that has happened over the past 2 years change is overblown. And we're going to see it change very dramatically here shortly. And we're already seeing that shift occur, like right now in our eyes, right now. So I thank you all for joining this quick, stock market talk with the agent, and like how I'm viewing things right now in markets. I just wanted to kind of share that with you all. Hopefully, you're able to take some bits and pieces away from that and enjoy. But that's pretty much it for me this evening. I've got an early bedtime myself, so I'm gonna go ahead and probably just push some tea and head to bed myself, so I could be able to take on the upcoming week that we have. Hopefully all things are good for you all as well. But I'll leave you with this trade. I like Palantir. Palantir off this last week. Great sign of basing, right? Where the 130 is kind of like the confirmed bottom price, right? Especially how you see how it wicked up here, right? Like structurally said, I love this piece. And we could see a potential expansionary period that takes us from this 156 into 170, low pullback, into continue more expansion. I love this setup. I trade this setup every single day of the week. And we'll see if we fail or if we can get a nice continuation or big explosive move out of this. We don't have earnings here until August, so we have a little while before a really massive event potentially, but we never know. Some other news positioning could come out and do something similar as well. We have Ondas. Ondas has done pretty well as well, right? We've kind of sat here and grouped at the 9-10 range, and we just poked our head out a little bit. Haven't reached back to the highs just yet, but I think we could definitely see a continuation of expansion here. This is reminiscent really of Palantir. Like Palantir $7. If you guys remember Palantir $7, 2023, that's what Ondas is giving me right now. Palantir $7. Right? This price action here of what was back here in 2022, 2023, and then reaching into an expansionary period. I don't know if it's going to do all this now. You know what I mean? Because Palantir definitely went bonkers for real, off the $7 2023 price range. Like we're talking, this thing is a 14 bagger over 3 years. But even if it somehow finds a way to do 30% of that, oh, well, I guess it kind of already has. Well, it's done 10/14 of that already. So, hey, who's to say it can't? You know what I mean? Who's to say Ondas isn't a $20 stock? If we're being honest, especially after solid grouping right here, like we've been like all 2026, you've been in $10 range, just chilling, accumulating, ready to break out. And with further and further defense spending, I think it's just logic at that point. Long it, add duration, go to bed. Like, stop overthinking your positions as well. But like I said, that's pretty much it from the agent. I hope you guys have a great one. We'll talk again soon. You know where to find me. Peace.